Hi, it's Andy West from the Inferential Investor. What we're doing today is doing a deep dive into the Tesla Q3 earnings report that dropped, having a look at what insights we can pull out using the professional analysis prompts from our website. Now, you're looking at the prompt library page on the Inferential Investor website. If we scroll down, we get very quickly to generating an earnings analysis report. That's what we want to do today. Click on that, we go to the earnings report page, which explains what you're going to get out of it, what it attempts to do, the models to use, execution notes, shows you a sample output so you can be sure that's the one you want, and then the prompt itself, which is just copy and paste right into your AI model. So you can see it's a pretty comprehensive report, prompt rather. It's been constructed by experienced hedge fund investors with decades of experience analyzing earnings reports, pulls out both quantitative signals, qualitative language signals, and shows you trends over time so you compare period to period and know what's really shifting within the business. Today I'm going to use the Google Gemini model to analyze this. I prefer this model for this task. It tends to structure the information better. What we do is attach the last two earnings presentations. I use two, so I've attached Q2 and today's Q3. The reason for that is it allows to draw out more information and show the evolution of numbers and of those softer signals, the language signals, over time, which gives the investor far more insight. We have the prompt pasted in, we add the stock code, and we run it. Now, I've already run this. It took about a minute and a half to run, and it generates out an equity research report, starting with performance highlights, moving through performance, guidance, management discussion, language, semantic tones, etc. So we'll have a quick look at each. And then this report is already pasted up on our website under the stock research tab. That's inferentialinvestor.substack.com. So we'll put the link underneath the video as well, and you can navigate there and see the full report. Performance summary table for Tesla Q3. What we saw was a really interesting situation. Revenue, revenue beating by 5%. That's the top line here. You can see the report compares achieved results to consensus. Surprise was plus 5% and a beat. EBITDA 7% and a beat. But the real problem on the EPS line, what we saw was a miss. 50 cents achieved versus 56 cents under consensus. About a 10-11% miss. Now, that's what the market's going to focus on. We're going to need to understand why that's happening. So we'll see what insights the report can generate for us. It goes into key business drivers and performance indicators. I'll let you go through that. I encourage you to go and look at the report. And let's move on to some of the more interesting and differentiated measures that we get out of this. So the performance chart is shown. That's just summarizing more visually the beats and misses. Growth trajectory is interesting. So for Q2, what we saw was revenue fall 12% and adjusted EPS 23%. That was the tariff-affected, Liberation Day affected quarter. Consumer sentiment dropped. Everyone paused for a while. We've seen in Q3, at least on revenues, a rebound in revenues, vehicle deliveries, etc. As some of those concerns went away, but not on EPS. EPS fell faster, 31%, and indeed operating earnings did too. So it was a mixed result, and this is what we get in the growth summary. Mixed verdict, beating consensus revenue, missing on adjusted EPS, strong sequential revenue growth, but that's the rebound from the decline in Q2. However, the primary concern, and this is where the market's going to focus and what may drive the share price, is profitability trends with operating margins contracting. The second section of the report covers the management discussion and analysis part of the earnings presentation. This is where we pull out, you can see management discussion for the current quarter and then below that the prior quarter. Really interesting to compare and contrast those to see what is changing in terms of the focus of the company and the language of management. Let's start with Q2. Now, management position, as the report tells us, Q2 is a really visionary point. A lot of the focus in Q2 was on their leadership and becoming a leader in AI and robotics, not just electric vehicles. And that's probably pretty important for the Tesla share price because Tesla share price is a huge PE. It's very high, as are many of the AI leaders in the market, with a lot of that value baked into the share price, all about the story of the future. Now, why is that important? Well, in Q3, what we've seen is that the focus of management discussion became far more operational in nature, focusing right back on the core business itself. So it highlighted record vehicle deliveries, record energy storage deployments. We saw that in revenue rebounding. That's certainly positive. However, that what we also saw is some acknowledged near-term uncertainty and issues in cost structures, AI costs, R&D costs, etc., that are really at the heart of some of this earnings decline that are particularly shown at the EPS line. So in Q3, it's a shift back to refocusing on the core business from the visionary language of Q2. And the question is whether that's enough for the share price, particularly given the headline EPS miss as well. A semantic tone and comparison. This is where AI models boil down language into numbers. They're very good at measuring sentiment across documents. What we see with the sentiment score, we measure it from 0 to 20, is Q2 was quite a high sentiment score, 16.5, a real visionary language set focused on the future of AI and robotics. And that's retraced to 14 in Q3, being very much a more operational focus, as we've pointed out. So the model is picking up these nuances in change in language and focus. And they're probably pretty important given Tesla can be quite a sentiment-driven stock. There's a summary of the tone shift that puts words to what I've just been talking about, shift from visionary to operational. Then thematic shifts, what themes have been brought out within the language and discussion. Q2, AI and robotics, seminal point, robotaxi launch, whereas in Q3, about vehicle deliveries, free cash flow, affordable vehicles, with some wording on near-term uncertainty, which is, as we can see, captured in the sentiment score, slightly more negative. Step 3 looks at guidance evaluation and the implications for consensus. What's going to happen to numbers? Now, normally this would be a big part of the report. Here with Tesla, they don't give numerical guidance. There's not a lot for the model to go on. It does pull out some interesting things on volume production, Cybercab, Tesla Semi Megapack, starting up with that, Optimus first generation product lines starting to be installed. All important, but non-numerical in nature. But this is something that's particularly quite interesting. You can see you get a section on analyst revisions, Q4 targets and analyst revisions. For other companies where more numerical guidance is given, this would tend to compute what might be the likely analyst revision overnight, which is important for the share price as well. Section 4 is really interesting of this report. It adds some insights you won't get out of any broker report or other write-ups that you typically see on socials or finance blogs. And this is where we've crafted a section to analyze what is missing in the report. Specifically, there's a lot of information that gets dumped on you around reporting season time and as the earnings come in. And it's easy just to focus on what's in there. This comes from the other point of view. It looks at pre-earnings expectations from stock write-ups, broker reports, etc. Draws out the aspects of information the market expected or hoped to see that form a part of the overall expectation set. There's obviously numerical consensus expectations. This is about some of the developments that the market expects to see with respect to the business. It gets a good sense of that and then reports, it analyzes whether those issues and themes have been addressed within the earnings report itself. So step 4 is called What is Missing. Here you can see it talks about quantitative guidance, but that's regularly missing in Tesla reports as it notes. So the model notes that that's the case. It does pick up on automotive gross margins and highlights this as a primary area of market concern, where the company itself have called out climbing vehicle costs, particularly with tariff imposts. So automotive gross margins are a part of the overall cost picture that's affecting the earnings outlook for Tesla. It picks up some aspects with respect to the expected developments on this more affordable model. In Q2, management really raised expectations in the market on what would be coming up, with expectations that it would enter volume production half to 2025. There are some pictures of it in the earnings presentation. There's some commentary on it, but there's certainly no numerical guidance. They call out more uncertainty with respect to the business, and they can't give volume guidance at all. So that's a little bit negative from the perspective of what was expected going into the earnings result. The product roadmap has led to the more affordable model, but we don't know how much volume it will drive. The last bit is on robotaxi KPIs. Q2 was all about the robotaxi launch within Austin, Texas. Q3 notes that robotaxi service is going to expand to the Bay Area, but there's certainly no more concrete metrics being provided on fleet size utilization and these sorts of things. So this is another thing that the report picks up on, suggesting there may be some softer disappointment, not only on the EPS line, earnings and cost progression, but on some of these developments where in Q2 expectations were elevated by management's own announcements on them. The last section is simply an executive summary. It summarizes everything we've gone through and gives you a full insight report on the earnings. So this is something that Inferential Investor can provide you as an investor with very quickly as earnings hits the tape on any company in the market. Within a couple of minutes, you get insights not only on the numbers they've achieved versus consensus expectations, which is often where most write-ups end. It goes further than that into insights on how the business is progressing, the themes management are focused on, what information was expected but might not be there, sentiment trends, nuances and themes in the discussion and analysis that may not be picked up by other commentators on the stock. So if you like this, subscribe to the video channel, subscribe to the Substack, inferentialinvestor.substack.com, and we'll be updating throughout earnings on many of the top stocks and the developments that they have using the professional prompts that we have within Inferential Investor.